When gold rises, people cheer. Investors post screenshots. News anchors smile. Everyone feels a little richer. But there's a problem with that reaction, because when gold rises, somebody else is always losing. And it usually isn't who you think. Gold's rise is sold as proof that wealth is safe, that the system is protecting you. But the truth is almost the opposite. When gold climbs, it's not celebrating prosperity, it's measuring decay. Every uptick in the gold price is another quiet admission that the money you use every day is worth less. We were trained to believe that gold goes up because it's strong. In reality, it rises because everything else is getting weaker. Gold isn't running the race. It's standing still while the currency around it collapses. And when you understand that, you stop seeing a price chart and start seeing a warning sign. So who's losing when gold rises? The answer starts with the people holding dollars, not ounces. Every saver with money in a bank, every worker paid in a weakening currency, every retiree on a fixed income, those are the real losers. Because their stored effort is melting silently day after day. When gold hits new highs, it isn't the rich celebrating. It's the rich quietly moving their chips off the table. The central banks, the institutions, the funds, they know that a gold rally means confidence is cracking. They use it to rebalance before the crowd wakes up. And the crowd never does. Because we're conditioned to see gold as a speculative bet instead of what it really is, a mirror reflecting the health of the system. You can tell a lot about power by who's allowed to hold it. In the modern world, the people who claim to own gold rarely touch it. Their ounces live inside paper contracts, ETFs, digital claims. What they actually own is a promise, an IOU issued by the same system they're trying to hedge against. It's like buying life insurance from the same company that plans your funeral. The more layers between you and your wealth, the more control someone else has over it. That's why true ownership always makes the system uncomfortable. Physical possession is an act of quiet rebellion. Every coin in your hand says, "I don't trust you to keep your word." That's why gold is tolerated but never celebrated by the institutions that rule money. They prefer it locked away in vaults they control. When you see headlines about record central bank gold buying, understand what that means. They're not protecting you, they're protecting themselves from the policies they created. And here's the twisted beauty of it. When gold rises, those same institutions profit twice. First, from the inflation that drives it up. Second, from the paper trades they sell to everyone else chasing safety. They create the fear, then sell the antidote. Meanwhile, the average person cheers a higher price, not realizing it means their cash buys less, their savings stretch thinner, and their future costs more. They celebrate the signal of their own loss. This is how control works. Not through force, but through illusion. The illusion that value is rising when stability is falling. The illusion that you can own safety through digital contracts and brokerage apps. The illusion that freedom can be traded like a stock. Ask yourself, if the system collapsed tomorrow, what would your gold ETF do for you? Would the shares in your app turn into metal in your hand? Or would you just be holding another digital receipt in a network gone dark? Real control is never granted, it's taken. It's taken through understanding, preparation, and sometimes refusal. Refusal to play by the rules designed to keep you dependent. When the rich buy gold, they're not chasing returns, they're buying exit options. They know that power shifts quietly, not loudly. The system collapses from the inside first. And by the time the average person feels it, the insider's already moved. That's why you'll see articles claiming gold is boring, obsolete, or for doomsday preppers, because control depends on ridicule. They mock what threatens them. They need you distracted by digital portfolios and dopamine notifications, not wondering who really benefits from your labor. Every empire has used gold as a mirror of its decay. Rome debased its coinage until it collapsed. Britain offloaded its reserves to fund wars. America severed the gold link entirely in 1971, trading metal for promises. 50 years later, the promise is cracking. When gold rises, it's not just the market reacting, it's history whispering, "You've been here before." But here's the modern twist. Even physical gold isn't pure independence anymore. Most of the world's bullion is stored, tracked, and insured through digital systems. Your vault receipt might look physical, but it's still a dependency. So the real question isn't, should I buy gold? It's, how much of my life do I control directly? Because if someone else holds the key, if someone else controls the ledger, if someone else sets the price, then you're still a tenant, not an owner. Gold rising doesn't free you. Awareness does. The more you understand what's behind the numbers, the more you realize the system runs on your consent. Every click, every card swipe, every digital deposit is a vote for the world they built. And they built it to harvest, not to liberate. Gold's rise is the symptom. Control is the disease. The antidote isn't found in metal or markets or charts. It's found in reclaiming agency, in refusing to celebrate losses disguised as wins, in building systems that can't be seized, frozen, or devalued overnight. You don't have to own gold to understand its lesson. You just have to see through the illusion. Because when gold rises, the world tells you to feel safe. But what it really means is that safety itself is slipping away. So ask again, when gold rises, who's really losing? And if the answer feels uncomfortable, that means you're finally waking up.